Hello traders, and welcome to the third video within the structure section of the IPDATrader's private mentorship course. And we're not going to be wasting any time, and we're going to be starting right now. So we're going to be taking a look at the difference between external and internal structure. And this is a crucial aspect of your structure understanding, because it's really going to be drawing the difference between the candlestick structure, right? Because we need to understand that even though we define structure with those swing points, just as I've been really teaching you in the past two videos, we also need to understand that the candlesticks themselves also create trends, right? If we look, if we look closely over here, maybe we actually go to a different chart. Let's go to GJ. Let's go to a slightly lower, maybe the 1 hour. Move this indicator for now. And if we look closely, right, the first thing you want to do for this exercise is go to a low point in the chart, right? And as I'm doing this stuff, really look at your charts and try to see the same things happening, right? If we look over here, we can clearly see that even though, right, the structure points are like this, we have a low, we have a high, higher low, higher high, higher low, higher high. We need to understand, right? If I can grab a different color, let's choose red this time. We need to understand that even though that's really the case, right? This is our structure right here, and this is absolutely valid and correct. We also have candlestick structure, which is essentially your internal trend, right? The points over here is considered your external structure. External, right? All these points over here are considered your external structure, right? Over here, external, external, external. But in between, we got what we call in smart money concepts internal structure. And that internal structure is absolutely determined by the candlesticks, right? So if we look closely over here, you will see that you have swing points in between those structure points, right? We have a wick here, another one here, right? This is kind of a bad example because the market is kind of consolidating. So let's actually move to a better example over here, right? This is much better. So we see that we have inner trend occurring, right? We have a wick, then we move up, then we create a high over there. If you follow the candles in the wicks, right, this is sort of what the structure would look like. And this really can get very confusing, right? And do not worry, I'm going to be drawing this out in the drawing tool over here so that you can get a better understanding. But what I want you to understand for now is that you need to differentiate between the external structure, which is going to be your structure points, right? Just like I was discussing on the previous videos, structure points, and your internal structure, which kind of refers to the fractal nature of the market and the previous video in structure, but it's a little bit more in depth, and that really corresponds to the candlestick trend slash structure. There's two types of structure within a particular market, and you really need to understand the difference between those, right? Because you really want to be taking trades once the different those two different structure ideas match and line up. That's when you're going to be having your high probability trades. So let me remove some of this stuff because it's getting pretty messy, and I will be back in the drawing board, and we're going to be taking a look into this concept right here today. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, AAAFX. AAAFX is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well-known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN Plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good and not many other brokers will do. So once again, massive thank you to AAFX for sponsoring this video. And now into today's lesson. Enjoy the video. So traders, we're back on the drawing board and I'm pretty excited for this one. So let's actually not waste any time. So as we said before, we're going to be discussing the difference between your external structure, which is essentially your structure points, and then you have your internal structure, which refers to your candlestick structure slash trend. Okay, that's what we're going to be taking a look now. Now you need to understand that the external structure and internal structure happen in the same time frame, right? It's not like your external structure is the higher time frame and the internal is the lower time frame. No, it's actually the same time frame, and we're going to be dissecting this concept and looking at this in detail, right? So if you can have some patience for a second so that I can actually draw what I want to draw over here, right? So if we look at this bearish trend and structure and we choose blue and we do this, okay, and you have some patience for a second because this is really going to be the missing piece that you may have within structure, right? However, don't forget there's plenty of sections, so do not get discouraged, do not worry, do not overthink, right? This is just to guide you within structure, because structure is going to help you knowing where we're potentially heading and what you can expect within a particular market. Now, if I was to ask you a question, right? If the question is going to be, what is the external and internal structure within this market, which is essentially the same time frame, right? This is not looking at different time frames. This is just looking at the same time frame. So pause the video for a second and really answer the question of what is considered external and internal within this trend. Okay, so now you had time to pause the video because I'm going to be revealing the answer now. So if we grab back color red and we look at this in detail, we can clearly see, and you should understand at this point, that this swing point over here, this one over here, this one, and this one, and this one is considered your external structure, right? So we're going to be actually labeling that. Right here, you should understand that this is your external structure. Why? Because this is actually your major swing points that actually are responsible for the lower highs and lower lows that are actually following the trend. So we understand that. Cool. Now looking into internal structure, and let's grab blue. You should also understand at this point that all these up and down moves, right, within structure is considered your internal structure, which refers to the candlestick structure and trend, right? Just like this. And this is all looking at the same time frame, guys. Don't confuse this with the fractal nature of the market. This is a different topic. So what I want you to understand is that even though this market is absolutely bearish at all times technically, right? We're always pushing down. What you need to understand is that this bearish market is going to have bullish phases and bullish momentums, right? Just like over here, this is bullish, and if I was to give you another leg up over here, you would have bullish into bearish, right? So you should understand that even though you're looking at a bearish market, there's going to be scenarios where you have bullish candles, right? Hence candlestick structure. The candles are going to be printing at this point, right? If we look at this section right here in particular, you should understand that the candles and the candles that you're going to be watching in the chart are going to be printing bullish, and they're going to be making high highs and high lows. However, that doesn't mean that the trend is now bullish. That just means that the trend is retracing, and for that reason, you are getting bullish candles that are making sort of higher highs and higher lows, right? You could have a potential retracement that looks like this, right? But this doesn't mean that the trend is now bullish. This just means that we are in a retracement phase right here, right? And this is where, if you don't have a lot of experience within structure, you should really stay away and maybe try and catch the end of the retracement to really take advantage of the expansions back down, right? Because we're overall expanding down since we are in an overall bearish trend. So if we clearly look at this section, right, you should see that the candlestick structure at this point, if I was to ask you a question, what is the trend over here? If you're just taking into consideration this section right here, you should be able to answer me that this is a particular candlestick structure that is looking bullish, and that is my internal structure, right, over here. If we look over here, the candlestick structure at this point is bullish. Same thing over here, right? Let me actually grab a back blue, smaller size, and let's draw it over here because it's getting messy over there. So the candlestick structure at this point is bullish, right? You should understand that. That means that my external structure is still bearish. However, my internal structure is now bullish, and I should be avoiding this market. If I'm being honest, if you do not have enough experience, do not try and trade a internal bullish structure within a external bearish structure, right? Wait until the external and internal structure match again, right? So I know you may have some questions, some gaps. How do I trade this? How do I trade that? And I want you to have patience. Do not worry, right? The course is designed in a way that is going to make everything fall in line for you as you go through the different sections. Do not worry, everything is going to get answered as you go through the videos. It's just about having the patience to do that, taking the right notes, watching it the right amount of times, and backtesting the concepts, right? Because at the end of the day, I'm just giving you all the tools you're going to need and a sort of blueprint for you to succeed. But if you do not put the effort, it's really going to be difficult for you, right? So guys, I think I've said this before in some of my free YouTube videos, but I'm going to be mentioning this again, and that is that you should really be thinking about structure as a human body, right? Meaning your external structure should be considered your skeleton of the body, right? But once again, do not think too much of it. I'm just trying to give you all my information here. Really, external and internal structure is nice to understand, but it's not going to be a sort of key aspect of how you're going to be trading the market, right? So do not worry too much. I'm just trying to give you my best information and really not trying to hide anything from you, right? I've been trading for a very long time, and I just want to give you sort of everything that I know, right? And putting this into the course. So now that you understand the difference between external and internal structure, we're going to be taking a look and talking a bit about different breaks in market structure, right? Because that's a topic that is important, I believe. And this is sort of going to give you some guidelines on when to expect a bigger retracement, when to expect a sort of smaller retracement, right? So we're going to be discussing that. So let's get rid of this. And we're going to be talking about breaks in market structure, right? So let's actually do this, breaks in market structure. And this is an important topic, to be honest. So for those of you guys who don't know, let me actually give a quick definition and an example of what a break in market structure is, right? So if we have a market like this right here is a break in market structure when we take out the previous high and we establish a new high. So now you should understand that once we break this high right here, we have a break in market structure since we are breaking previous high and we're establishing a new high, right? So this is pretty straightforward. This is pretty simple. This is what a break in market structure looks like, right? If we were to draw it in the opposite direction, again, pretty simple. This is a break. And this right here is a break right there, right? And if we retrace again and if we happen to take this low right here out, this would now be considered your new break. Now, there's different types of breaks, and this is what I want you to understand, right? And this is where some people get confused. If you have a break, right, that just barely wicks above the previous structure, right? Maybe actually let me draw it with candles. So let's say we have a bearish retracement, right? Just imagine this is a bullish expansion over here. We have a bearish retracement at this point. Let me get this tool right here. These are candles that are going down, right? Just like this. And if we use sort of green for the bullish candles, just like this, and we now understand that, hey, once we break above here, we have a new structure point. So what you will find is that if we have a break that just is a wick, right, that we don't have a actual candle closing above, right, we do not have a candle closing above and pushing higher, right, we just have a wick that breaks above but then closes below, that is still a valid break. That's what I want you to understand at this point. And let me draw it, write it down in black. This is a valid break in market structure, or BOS, whatever you want to call it. If we have a wick that breaks above the structure, even though we still close below the previous structure point, that is a valid break. And really, if you see that we wick above the structure, that is a clue, and that is something that means that price is telling you that we need to retrace all the way down with high probability, right? There's going to be a high probability that price needs to retrace all the way down, right? Because we need more liquidity to keep on pushing higher, right? If we break with a wick, that means that price needs liquidity, and that means that there is a higher probability that we are going to be retracing this impulse up right here, right? And you can now use this information and say to yourself, okay, I'm not going to be rushing to get into buys because I understand that we broke with a wick, and that means that we're probably going to retrace the entire movement up into a new structure point lower that is then going to lead into higher prices, since this is actually a break in market structure just with a wick, right? Now, if you have this scenario, and let me actually draw it again, something like this should be fine. I'm trying to go as fast as I can just so I don't make this video too long, but we really need to take the time at this point. Now, if you have a break, right, in market structure with a strong candle, this is your break right here, and this is sort of how the break looks like, right? Imagine this is an impulse up and we have a bullish trend, right? If we were to draw the structure points, would look something like this. Now you understand that price has good liquidity, good fuel, and we're probably not going to be retracing as hard as we would if we would have broken the structure with a wick, right? Keep that in mind, guys. If we break with a strong candle that closes above the previous structure point right here, that means that we have good liquidity in our hands, we have good fuel, and we may sort of just get a 50% retracement and continuation. That's what you can expect. Because if you read candles and you read volume, you should understand that those candles have a lot of volume, meaning a lot of really billions of dollars being pushed into those candles, and we don't need to be retracing as hard as we're breaking strong above with good volume. So for this last section of the video, we're actually going to be jumping back into the charts, and we're going to be discussing what we've learned today, right? We're going to start with the idea of wick BOS and how that really looks in terms of candles, right? Again, it's actually explained over here, but we're going to be looking at this in terms of candles. So we jump back, we're watching gold over here, and let's try and find a suitable example. So I've conveniently have something that I like over here. Okay, so again, ignore all this previous noise. We're just going to be focusing on the idea of wick BOS at this point, right? So we have this, right? We break sort of structure over here. So now you can say to yourself that, hey, we've broken structure higher. This is a break in market structure, and if you pay attention, you can see that we do not have a candle closing above it. We just have a wick quickly breaking that point and returning strong bearish, right? So we can go ahead and label that. This is my wick BOS. And as you can see, as we said before, that means that price needs to retrace most probably all the way down in order to grab more liquidity and in order to then possibly continue higher, right? That should be your expectation within this market. So we take a look into that, And as you can see, if we follow the candles and we follow structure, we can actually see that. We break that. So you can see your candlestick trend and structure is bearish at this point, right? That's why I said it's important to understand the difference between internal and internal structure, right? We go all the way back down. Why? Because we broke with a wick, and that tells us that liquidity needs to be grabbed before continuing higher. So we follow structure and candlesticks, right? We continue, we break above here, we continue. Again, we're not breaking this high, so all this over here is just internal trend, right? And as you can see, it can very quickly get very messy. So that's why I said focus on the points where the external and internal structure actually match. So we keep following, right? At this point, sort of the candlestick trend is telling you that we're going higher, but then we go all the way down. And as you can see, we never break past this point because this is actually the origin, and this is actually where we're going to be targeting for the liquidity that is going to be taking us to higher prices. So we hit that, and then we go ahead and strongly break above, right? That's why it's important that you monitor price as we're breaking structure, because you want to assess the way that structure is breaking in a given time frame. And in this case, it was clearly with a wick. We do not have a candle closing above it. So that's why the candles drop back down, seek for this origin of the impulse to grab more liquidity that then clearly pushes price higher. And then you have your structure points bullish and your candlestick trends bullish, right? Higher high, higher low, higher high, higher low, higher high, over here, higher low, and we continue up. We can see higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then your candlestick trends quickly shifts bearish, right? This is a bearish structure at this point if you're just looking at the candlesticks, and we continue bearish, 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 right? Okay, that's actually wrong. This is actually your point over here, and this is how the candlestick structure shift back and forth, and your external structure also can shift back and forth. Hence why we don't just use structure to take trades, because structure alone is not enough for you to be profitable in the market, or at least that's what I believe, and that's why I teach all the other concepts, and you have all these other sections at your fingertips. So I hope this video was valuable in regards to structure. At this point, you should have a pretty good understanding of structure, right? And essentially, you should be really ready to implement these structure ideas whenever you're looking at charts. That's why I suggest you actually go through charts. Maybe if you are not very experienced, start by actually denoting swing points and trying to connect the dots and trying to make sense of what is actually happening. So I will see you guys in future videos within the mentorship. For now, keep studying, keep watching, engage with the community, use the charts, and really try to really exploit your time within the Discord group as much as you can. I'm always going to be available for you guys on Discord, so do not hesitate in regards to messaging me. I will try to help you as much as I can. I see you guys in future videos within this section.